Hey everyone, and welcome back to The Explainer. Right now, the crypto market is absolutely on fire. We're talking a full-blown bull run, record highs, massive IPOs. It's wild. But while everyone's celebrating, there's this legal war quietly brewing in the background that could reshape the entire industry. So today, we're going to break down the hidden risks that come after the boom.
All right, let's just dive right in. To really get a handle on the legal side of things, you've got to understand the mood right now. And honestly, the only way to describe it is a gold rush. The optimism in the crypto world is just completely off the charts. And you can literally feel that momentum in the numbers. I mean, Bitcoin surging more than 25% to a new record high this year, that's not just a statistic. That is a massive vote of confidence from investors, and it's powering this whole ecosystem. And the crazy thing is, this excitement isn't just about people trading tokens on their phones. Nope, it's spilling over onto Wall Street in a big way. You've got companies like Circle seeing their stock quintuple 5 times after their IPO. Bullish jumps 84% on its first day. This tells you that the big, institutional money is jumping in with both feet, especially with what feels like a much friendlier government stance.
So you see all this good news, right? And a lot of people in the crypto world are thinking, okay, the war is finally over, we won. The feeling is that the biggest threat out there, a super aggressive federal government, has basically been taken off the board.
And this right here, this is the statement that really got everyone excited. I mean, when the new SEC commissioner comes out and says something like this, it feels like a monumental shift in policy. It sounds like the top federal cop is being taken off the beat, you know? Like we're moving to a much more hands-off approach.
But that raises a really important question, doesn't it? Does a new attitude in Washington really mean that all the legal risks for the entire crypto industry have just, poof, vanished? Is it really that simple?
Well, not so fast, because this optimism might be missing a huge piece of the puzzle. Here's the first reality check. Government policy can change on a dime, but the law itself, well, the law has a very, very long memory.
And here's the part that I think a lot of people are forgetting. During the last administration's big crackdown, the SEC wasn't just handing out fines. They were taking companies to court. And in these huge cases, federal judges actually ruled that yes, many of these digital assets are securities. And those court decisions, they don't just disappear when a new person takes charge.
And this, right here, gets to the absolute heart of the matter. Look, a policy statement from the SEC is a big deal, but it's not the law. It can change with the political winds. But a federal court precedent, that is the law. It stands until a higher court says otherwise. And most importantly, it trumps whatever an agency says its policy is. Okay, so that leads us right into the second big risk here. If the federal government eases up on enforcement, it creates this power vacuum. And, the law abhors a vacuum. So who do you think is stepping in to fill that void? Yep, the states.
And you can see this playing out like clockwork. The SEC drops its massive case against Coinbase. And just weeks later, the Attorney General of Oregon picks up the ball and files their own lawsuit. It's a perfect cause and effect. The federal cop backs off, and suddenly, the state cops are grabbing the badge.
And believe me, this isn't just an Oregon thing. You have these powerful, often politically ambitious state attorneys general, like New York's Letitia James, who are using their own state laws to go after the industry. So instead of dealing with one federal rulebook, crypto companies are now facing this messy, complicated, and super expensive patchwork of 50 different ones.
And that brings us to the third new risk. And honestly, this one might be the wildest of all. Because the threat isn't just about which government agency is doing the suing anymore. It's about who is doing the suing. There's a whole new army getting ready for battle.
So first, a real quick definition for you. When we talk about the plaintiff's bar, we're talking about those trial lawyers in private practice who specialize in suing companies, usually in class action lawsuits, on behalf of people who say they've been wrong. So check this out, because here is where the story takes an incredible turn. The very same top lawyers from the SEC, the ones who spent years becoming experts on how to sue crypto companies, are now leaving the government. But they're not retiring, no way. They're joining the plaintiff's bar. They are literally taking all that insider knowledge and joining a different army to launch a brand new wave of lawsuits from the private sector.
Okay, so let's pull all these threads together. The feds seem friendlier, but we have these old court rulings that won't go away. We have new state regulators jumping into the fight. And now there's this fresh army of private lawyers. What does this new legal landscape actually mean for the crypto industry?
Well, here's the biggest takeaway. The legal risk for crypto hasn't gone away. Not at all. It is simply transformed. It's shifted from one single, clear adversary, the federal government, to three totally different and unpredictable new battlefields: those sticky court precedents, aggressive states, and that new army of private lawyers.
And that leaves us with one last, kinda ironic thought. The whole crypto movement was built on this ideal of decentralization, right? Avoiding any single point of control or failure. But now, the industry finds itself fighting a scattered, unpredictable, and completely decentralized legal war on multiple fronts. So the question is, could the industry's own core philosophy actually turn out to be its greatest vulnerability?